Hello and welcome back to StockMaven, your daily source of news and insights on cryptocurrency markets and related topics. In today's video, we'll be discussing the recent news that a major sports and entertainment company has sold its stake in a leading NFT platform. As you may know, NFTs, or non-fungible tokens, have become a hot topic in the crypto world in the past year, as more and more artists, musicians, and celebrities have started to use them to monetize their digital creations. NFTs are unique digital assets that are verified on a blockchain network and can be bought, sold, and traded like any other asset, but with the added benefit of being one of a kind and provably scarce. One of the biggest NFT platforms out there is OpenSea, which has seen tremendous growth in user adoption and trading volume in recent months. OpenSea allows anyone to create, buy, and sell NFTs on its decentralized marketplace, which supports a wide range of assets, from art and music to gaming items and virtual real estate. However, it seems that one of OpenSea's major investors has decided to cash out on its stake in the company. According to recent reports, Endeavor, a global sports and entertainment company that owns several high-profile properties and brands, has sold its shares in OpenSea for an undisclosed amount. Endeavor acquired the shares in 2020, when it participated in OpenSea's series of funding round that raised $23 million. While the reasons for Endeavor's sell-off are not clear, some industry observers speculate that it may have to do with the company's recent decision to go public through an initial public offering, IPO. Endeavor filed for an IPO in May 2021, and the move could have prompted the company to reevaluate its investment portfolio and focus on its core businesses. The news of Endeavor's exit from OpenSea may have some impact on the market sentiment towards NFTs and the broader crypto industry, as it signals a potential shift in the dynamics of NFT adoption and use cases. Some analysts argue that Endeavor's move could be a sign that the NFT hype is fading or that institutional investors are becoming more cautious about the crypto space. However, it's worth noting that NFTs are still a nascent and evolving market, and it's not unusual for early investors to sell their stakes in startups or companies as they mature or face new challenges. Moreover, OpenSea remains one of the leading players in the NFT ecosystem, with a vibrant community of creators and collectors and a growing list of partnerships and integrations with other platforms and services. In fact, OpenSea has recently announced several major developments that could further boost its appeal and value proposition. For example, the platform is working on a new feature called Bundles, which will allow users to package multiple NFTs together and sell them as a single unit. This could open up new opportunities for creators to monetize their NFT collections and for collectors to acquire more assets in a more convenient and efficient way. OpenSea is also planning to launch its own DAO, or Decentralized Autonomous Organization, which will allow its users to participate in the governance and decision-making processes of the platform. The DAO will be powered by OpenSea's native token, called $Seal, which will give holders a say in the platform's direction and incentives. Overall, while Endeavor's sell-off may raise some eyebrows and questions, it's unlikely to have a significant impact on the long-term prospects of OpenSea and the NFT market as a whole. As always, the crypto world is full of surprises and uncertainties, but also of innovation and potential. As NFTs continue to gain popularity and mainstream acceptance, it's no surprise that more and more established businesses are taking notice. One such company is the sports retail giant FANATIC, which recently sold off its stake in the NFT platform Candy Digital. FANATIC originally invested in Candy Digital in June 2021, with plans to create NFTs featuring sports trading cards and other memorabilia. However, less than a year later, FANATIC has reportedly sold its entire stake in the company to Galaxy Digital, a digital asset management firm. The exact reasons for FANATIC's decision to sell its stake in Candy Digital are unclear. However, it's worth noting that FANATIC recently raised $325 million in a funding round led by SoftBank, which could indicate that the company is focusing on other areas of growth. Despite FANATIC's departure, Candy Digital continues to move forward with its plans to create NFTs for sports fans. The company recently announced a partnership with the NHL to create NFTs featuring classic moments from the league's history. Candy Digital has also collaborated with the NBA, creating NFTs featuring some of the biggest names in basketball. The company has also announced plans to release NFTs featuring soccer players, including international stars like Lionel Messi and Neymar Jr. As more and more companies like Candy Digital enter the NFT space, it's clear that the world of digital collectibles is here to stay. NFTs offer a unique way for fans to own a piece of history and connect with their favorite athletes and teams in a new way. Of course, with any emerging technology or trend, there are always risks and uncertainties. Some experts have warned that the NFT market is overhyped and could be headed for a bubble. Others have pointed out concerns around the environmental impact of NFTs and the large amounts of energy required to create and trade them. Despite these concerns, many in the industry remain bullish on the future of NFTs. And as more and more established companies like Fanatics and Candy Digital invest in the space, it seems likely that NFTs will continue to play a significant role in the world of sports collectibles and beyond. As always, it's important for investors and collectors to do their research and approach the NFT market with caution. But for those who are willing to take the risk, there could be significant rewards to be had in this exciting and rapidly evolving space. After Dapper Labs, the creator of NBA Top Shot, became the first NFT company to achieve a $1 billion valuation, NFTs have continued to gain momentum in the mainstream world. And now, as the world continues to grapple with the impact of the COVID-19 pandemic, NFTs are entering a new realm of potential, beyond digital art and collectibles. As sports fans eagerly await the return of live events, NFTs are emerging as a new way to engage with the teams and athletes they love. Major sports leagues are already getting in on the action, with the NBA, NFL, and MLB all launching their own NFT initiatives. But it's not just the major leagues that are getting involved. Smaller sports organizations and individual athletes are also seeing the potential in NFTs. One such example is the Racing League, a UK-based horse racing competition that recently launched its own NFT platform. The Racing League NFTs allow fans to own a piece of the action, with unique digital collectibles representing each of the league's 12 teams. The NFTs also provide access to exclusive content and experiences, such as stable tours and meet and greets with jockeys. Individual athletes are also getting in on the NFT game. Pro golfer Justin Rose recently launched his own NFT collection, featuring digital artwork inspired by his career and personal interests. The collection also includes unique experiences, such as a round of golf with Rose himself. The potential applications of NFTs in the sports world are virtually limitless. NFTs could be used to sell virtual tickets to live events, providing a new revenue stream for teams and venues. They could also be used to offer exclusive merchandise and experiences to fans, creating a deeper level of engagement and loyalty. And beyond sports, NFTs are also starting to be used in other industries impacted by the pandemic. For example, the music industry has seen a rise in NFT sales, with artists such as Grimes and Kings of Leon selling exclusive digital albums as NFTs. As the world continues to shift towards a more digital future, NFTs are poised to become an increasingly important part of our lives. And in the sports world, NFTs could provide a much-needed boost for teams and athletes as they navigate the challenges of a post-pandemic world.